First up, we have with us Rob Booker. Rob Booker is the host of the Traders Podcast, which is available on iTunes. He's the author of Adventures of a Currency Trader. He's a former commodities trading advisor and money manager. He's also the founder of TFL365.com. Rob, are you there?
On to that for 6 days. What happens next? Let me show you your equity curve. Your equity curve looks like this. You take hundreds and hundreds and hundreds of trades. You hold them for 6 days, and this is your cumulative amount of pips earned. A trend trade with pivots held for 6 days makes tens of thousands of points. Here's a distribution on where price goes over the course of those 6 days. Okay? So I'm going to show you a distribution for those of you that are familiar with this kind of a graph. Most of the movement within that period of time was positive. It ended up with some wins that were about between 0 and 100 points of profit. The second most frequent occurrence in 6 days was that you made 101 to 200 pips of profit. The third most frequent occurrence was that you made 201 to 300 pips of profit. The next occurrence that was frequent was you lost 0 to negative 100 pips. Overall, you had 64% wins, and your average loss was 189 pips, and your average win was 220. So you had a 64% win percentage and a reward to risk ratio of 1.16 to 1. Now, when you have a positive win percentage and you have winners that are bigger than your losers, you're looking at a way profitable trading system. And this is the distribution of your results. Now, occasionally you had a huge win. You'd made more than 500 pips on a winner, and occasionally you'd even lose more than 500 pips on a loser. So it's not a perfect strategy, and we're going to refine it a little bit during this presentation. But what I'm saying here is when a pivot is missed and you take a trend trade and you hold it for 6 days, there's some money to be made here, and there's a real equity curve. I've logged every single trade occurrence over the course of the last 7 years in this spreadsheet, and I've done it for Aussie dollar, pound dollar, euro yen, Swiss yen, pound Swiss, I don't even know, like a ton of different currency pairs, but just look at all the trades. It's a simple strategy that essentially says when a pivot is missed, something interesting is about to happen. All right, let's take a look at, make sure everything's going on right. This webinar recorded? Absolutely yes. What stop loss are you using? All right, so I'll get into the stop loss question. I'll get into refining the system in a minute, but I want to go back over this. And I want to make sure you understand where we're coming from, and I want to make sure we're all on the same page. If you've just come in late, or I wasn't sharing my screen because I was like high on NyQuil or whatever, then here's where you are and here's where we're at. I'm looking at the Swiss yen here, but we could be looking at the CAD Swiss. We could also be looking at the Euro yen, which is the spreadsheet that we just looked at. Let's look at that. Here's the Euro yen. What happens when the Euro yen creates a pivot point but doesn't hit that pivot point on the day that it was created? Why does that mean something? I'll tell you why it means something again. The day that this pivot point was created, price didn't hit it. It's an early warning sign that price is going to trend. Let me zoom out here and I'll show you. I mean, it doesn't happen every single time. That's ridiculous, but it happens a lot. Price goes up from there. It's pretty awesome, right? It misses this pivot, and it's a sign that price is going to stretch higher. That's awesome. The first iteration or variation on this trading strategies, my friends, is simply a trading strategy which says if a pivot is missed, if that pivot is not hit, I gotta go, there's a lot of research on this chart here. If a pivot is missed, I'm gonna go ahead and buy it. If it's bought in on the day that it's missed. So on this day right here, at the close of business, on these candles right here, we buy this and hold it for 6 days. I answered the question, what happens? What happens then? How much money do we make if this pivot is missed and then we hold it for 6 days? I did research on holding it for 6, holding it for 7, holding it for 8, all the way through 120. All of them are profitable, but 6 is a nice sweet spot. What happens? We make a ton of money is what happens. You hold on to that thing for 6 days. Now you don't close it. You don't stop out at a stop loss. You just hold it. So sometimes you're going to lose and sometimes you're going to win, and this is your equity curve. The stop loss and the profit target is time based. You hold it for 6 days for winner or for loser. And that's your equity curve. This data was downloaded from 2 different sources. One from a source where you buy the data and you pay for it, and the other source was straight from the MetaTrader platform that I used for live trading. It didn't matter which I used. It doesn't matter. You could do your own research. If you're a member of the upcoming trading course, you'll get the spreadsheets and you can do research and play with the spreadsheets on your own. But the question is, holy crud, Booker, what in the world are you doing holding onto a trade for 6 days? What if that trade goes against you? What if that trade's a loser? What happens then? Like, that's ridiculous. Well, I want to share with you 2 different strategies that you can use to stop out of the trade, have a stop loss on it, and also so that you can get in at a better level. All right, so I'm going to go over 2 strategies where you can get in at a better level. First, I'm going to put a slide up that repeats the method so you get it written down. If a pivot is missed on the day that it is created, we trade in the direction of the miss. If price is above the pivot, then we buy. If price is below the pivot, then we sell. That's it. That's the methodology. I'm going to put this up on the screen and let you write this down, and we can talk about it for a moment. So this is the base element of the strategy. If a pivot is missed on the day that it's created, that's indicative of an early warning sign that a trend is beginning, and we're going to trade in the direction of the miss. So if at the end of the day price hasn't hit the pivot point, then we're going to buy it. If price is below the pivot point, then we're going to sell it. All right, you can write that down. You can also go to that link and you can grab the indicator for pivot points and whatever else. So I have a lot of indicators for pivots, but my favorite is an indicator that shows you the missed pivots. Now we're going to get down to how we take a really gigantic trade a little bit later and why I'm long Aussie dollar and CAD Swiss and why I'm holding on to these for hundreds and hundreds of points. But I want to finish talking to you about how we might get into a trend trade on the euro yen here on the 15-minute chart. So let's say that we're looking at the euro yen on the 15-minute chart and we miss this pivot right here. I'm going to give you 2 strategies and 2 techniques for getting into a trade based on that miss. I'm going to put up a relative strength index on this 15-minute chart. And I'm going to put in for my levels 40 and 60. Seems a little bit odd. Usually relative strength index has 70 and 30. I'm also going to use a period of 21. I'm going to plop it up on my screen. What you'll see here, if we zoom in, is after the pivot is missed, right down here, the day's trading closes, and price drops back down a bit further, and the RSI, set to 21, hits 60, right in this area. That is a buy trade opportunity. Instead of buying up over here when price closes, we're going to wait for a drop back down a little bit further, and we're going to put a stop loss below the pivot. Remember, the pivot has been missed. It's indicative of a trend that is developing. Price will eventually get back to that pivot, but it's going to take a break from doing that, and it's going to trend for a while. So we buy this currency pair here. Now there's another way to do this also. This is on November 28th. Let's drop down on the euro yen. Let's pull up the 5-minute chart. And let's go back to the 28th of November. Sometimes I scroll back too far. Okay, So here we are on the 28th of November, and you can see that missed pivot all over again. Here it is. And we scroll forward. Now, what I want to do when I scroll forward is I want to look for a couple of different things that show me that price has bottomed out. I want to see some signs that price has bottomed out. I'm going to use that relative strength index again, but I wanted to show you what price does. All right, so I'm going to pull up that relative strength index again. And what I want to show you is a couple of different ways that we could look for a buy trade. See, price is falling and the RSI is rising here. This right here is divergence on the 5-minute chart. From a shorter time frame chart, we're getting a divergence indicator, or an indication that price has bottomed out and that we're ready to buy. If we buy at that point, we have a pretty healthy amount of profit available to us. We'll get to profit targets in a moment. We have a pretty healthy amount of profit available to us. Like a lot. If we buy in this area on this divergence, we're going to get it at 139.12, and it does rise about 80 points higher than that. We'll talk about profit targets, like I said, in a moment, but we want to put the stop loss below that missed pivot. So let's switch over to another currency. Let's switch over to the Australian dollar, US dollar. Let's look for a missed pivot. Look for a pivot that wasn't hit on the day that it was created. Here we got one on December 8th. On December 8th, this pivot was created, and it was not hit on the day that it was created. So let's go down to the 5-minute chart on the Aussie dollar and go back to December 8th. I've got all kinds of things drawn on my Australian dollar chart because I'm currently in a trade. Okay, that makes it a little bit cleaner. Okay, let's go back to November 8th, and we're going to take a look at a possible trade that we could take around that time. So here's November 8th, and you can see here around November 8th we missed the pivot, and then we get some divergence. Now there's a lot of ways to draw this divergence. I've got an indicator that does it for me, which I will give away to you also. You just go to the website. We look for divergence, and we get divergence in an area where price is falling and the indicator is rising, and we're going to buy. Now that does pretty well too, actually. That does really well. You can see that from the moment that we see the divergence after that missed pivot all the way up to the far right, we're going to see a fairly significant, gigantic win. We're going to see a big move. The stop loss is going to go below the pivot. The profit target is going to be way higher. We're going to look at profit targets a little in just a moment. But you can see here that that is pretty significant. That is a pretty big difference between the size of the stop loss and the size of the profit target. All right. I don't usually stop and get to a bunch of questions, but let's take Jeremiah says, why am I calling this November 8th? I don't know, Jeremiah. I just get my dates wrong. It's December. I have a cold, so sorry about that, Jeremiah. Yes, it's December. Thank you, everyone. It doesn't matter when it was. It matters what the trade is. Let's keep our pants on. What was the RSI settings again? All right, so the RSI is set to, relative strength index is set to 21 on my screen. That RSI is set to 21. Someone says, is this explained in your book? No, this is only here. This is the first time I've ever talked about any of this. The pivots automatically appear on my charts, yes. And you can get, like I said before, you can get the pivot indicator And you can get the divergence indicator if you go to realtraderswebinar.com/TFL. On the right-hand side of the page, you will see a link for free indicator, and that will get you the missed pivot indicator for MetaTrader, which I hope that you love with all of your heart. Does it work for all markets? Yeah, this can work for all markets. It's a little bit different when you talk about stocks and ETFs, but it's much the same. All right. And then Yulin, one more question before we move on. Yulin says, what's the percentage of institutions using the same pivots? That is a great question. A lot of people say, well, my pivots look a little bit different on my charts than your pivots look. And I've spent since 2005, I've spent the last 8 years looking at pivot points. And let me tell you something. It doesn't matter what pivot points you use. It doesn't matter. The research is the same. Most pivots are hit on the day that they're created. Pivots that aren't hit on the day that they're created make for gigantic profit targets later on. Huge profit targets later on. Okay. I want to talk to you now about trading in the opposite direction. I want to talk to you about the really, 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 really huge, gigantic, big trade opportunities. There are right now, as of the time that we're talking here, some of the most absolutely incredible opportunities for long-term big trades that I've ever seen in the past 3 or 4 months. A few times a year, currency pairs will begin to miss large numbers of their pivots, and the charts will begin to look like this. The Canadian dollar Swiss franc, for example, has missed a daily pivot on September 20th, a daily pivot on November 22nd, a weekly pivot on November 29th. The monthly pivot for December has not been hit yet. The daily pivot from November 27th, and then a weekly and a daily pivot from last week that are so far on top of each other you can't even distinguish them from each other. And that's not all either. The Australian dollar, US dollar has fallen so far, so fast, that it also has a gigantic number of pivots that have been missed. A monthly pivot from June, a weekly pivot from November 1st, a daily pivot from October 29th, a daily pivot from the 20th of November, a daily pivot from the 21st of November, and then clustered in at 92 even, a ton of pivots, a daily, a weekly, and the December monthly pivot, all clustered in the same area. You might wonder, why is Rob long the Australian dollar, US dollar, and why did Rob buy the Canadian dollar, Swiss franc? Well, I'll tell you why. Because when you get clusters of pivots that have been missed together, price is very likely to return to those levels. So I'll pull up the PowerPoint slides and give you another principle of pivot trading. When clusters of daily, weekly, and or monthly pivots are missed together, price is bound to return to that level and creates the opportunity for a really big trade. I know I spelled opportunity wrong. We'll put this up on the screen and let you take a look at it for a few moments. When clusters of daily, weekly, and or monthly pivots are missed together, price is bound to return to that level or area and creates the opportunity for a really big trade. What I mean by a really big trade is a trade with a really small profit stop loss and a really gigantic profit target. How do you know when the market's about to reverse? Nobody knows for sure. Nobody does. All you get when you pick a bottom is a smelly finger. But when you get clusters of daily, weekly, and or monthly pivots that are missed together, price is bound to return to that level or area. I'm going to show you a few different charts that give you the same point of view. British pound, Australian dollar. Look at the missed pivots on this thing. Look at this. You know, Would you say that this is trending? Yes. Guess how all of this trend began? It began with a missed pivot way back when. Missed daily pivots, some of which were hit. It all started with a missed pivot back here at the left and a rocket ship move upward after that. Missed pivots, the first missed pivot in a series, is indicative of a trend that is developing. Look at this cluster of weekly and daily pivots in the 1.7500 area on pound Aussie. You know what price is going to do? Price is going to return to that level. What's the likelihood of it? Oh, you want to talk about percentage likelihood of something happening? The percentage likelihood is gigantic. Within 30 days, 94% of all missed pivots are hit. I have a 94% chance of hitting a missed daily pivot within 30 days of its creation. This pivot that was created back on November 22nd has a 94% chance of being hit by December 22nd. And it's clustered together with a weekly pivot from November as well. 1.7500 is gonna get hit. I just need to have a method in place for trading back to that level. But I just want to say for the record again, once you see that cluster, you know that price is eventually going to return to these areas. It's a high probability trade with a really big profit target. Right now we're trading at 1.8170, and this daily and weekly area is at 7,500. That's 600 points away. That is a big, big profit target to get to before December 22nd. That's a huge profit target. And instead of monitoring the short-term charts every 5 seconds and taking a ton of trades every day, you can take a more patient, easier, calm approach to this whole business. I'm going to show you at least 2 ways right now that you might want to go back toward this area on the pound Aussie, or you might want to trade the Australian dollar or whatever else. I'm going to give you a few different ways that you can do it. One, I'm going to give you plain old standard traditional support and resistance. Just draw a trend line that marks the lows that are being made right now on the British pound Australian dollar 4-hour chart. If we fall below this trend line at 80.65, I want to sell down to this level, 500 to 600 points away. It might seem like that is incredibly simplistic, but we're talking about trading in a much easier fashion without all the crapola. We do all the work up front to make the trading decision much easier. So all the heavy lifting is done by that research that we did a little bit earlier on. And then the decision that we make to trade might come on something very simple like a trend line break. I love support and resistance. There's one way you want to make all your money. Just become a master of support and resistance. Just become a master at drawing trend lines and support and resistance levels. It'll pay for itself 1,000 million times over. You could also put up on your screen an indicator like a divergence indicator. I can also give you the Knoxville Divergence Indicator for free on that link that we showed you earlier. Knoxville Divergence is an early warning sign that the price is going to reverse. Knoxville Divergence is momentum divergence combined with relative strength index. I did a whole presentation on Knoxville Divergence for Kevin and Mark and the Real Trader webinars people a couple months ago, and you can see that recording on their archives. So I'm not going to get deeply into it. You can just look for divergence on the 4-hour chart. Well, we have divergence on the 4-hour chart. So we have a number of significant factors in place right now that are showing us that the pound Aussie, although it has been a beast and is trending at an incredible rate, has missed a cluster of pivots, is divergent, has a trend line in place through which we can trade this, and some massive targets down here at the bottom. That's a pretty nice combination. I'm going to look at the CAD Swiss. We're going to take a look at that. And then I'm going to just ask you if you want to look at anything in particular. On the Canadian dollar Swiss franc at the bottom of the chart here, you can see bullish divergence, a cluster of pivot levels. We are on the Canadian dollar Swiss franc. This is not up for debate. It is going to hit 84.33. It is 100% likely that it's going to hit 84.33. Period. It's going to hit that level. It's trading at 83.91 right now. I'm already long, and I'm going to hopefully move my stop loss to break even at 84.33, and then I'm going to shoot for the December monthly pivot at 86.32. I got in, as you can see, at 83.75. I'm looking for a 290-point target on that trade. You can see here that a number of things have happened, but we were divergent, and we also broke through a trend line. Pretty simple. Is this guaranteed to be a winner? No, it's not. We could gap open on Sunday night and some craziness could happen. Not guaranteed that it's going to be a winner, but the probabilities are incredible. When you have probabilities that something's going to be hit 94% of the time within a certain date range, you have an enormous number of strategies that you can build from that. If you're an options trader and you know that a level is going to be hit within a certain amount of time, you have some incredible opportunities. If you're an options trader and you know that a missed pivot leads to a trend that lasts up to 3 or 4 days, you have an incredible ability to take some trades because you know the time element of options is so important. All right, I would love to look at currency. If you're a currency trader and you want to look at something together, let's take a look at something. After hitting a missed pivot, does the original trend resume? Asks Aaron. There's no guarantee on that. You have to wait. But the answer is there's no guarantee on that either way. Salva says that's a 1-to-1 ratio on the CAD Swiss. That's a 1-to-1 ratio, Salva, to my move to break even level. It's not a 1-to-1 on the profit target. So on this trade here, I have an entry at 83.75, a stop loss 45 pips lower, and a profit target of 86.30. So I have a 230 right now pip profit target for a 45 pip stop loss. I don't think that's 1-to-1. I'm going to move to break even to protect my trade, but that's not a 1-to-1. Dave says the free indicator link also registers you for a webinar. Yeah, it should register you for a webinar as well. That is correct, Dave. It should do that. You should get a webinar that teaches you even more ways how to use it as well. Can you use the stock chart? I won't be able to do that today. Let's look at pound yen 4-hour chart. And let me check that link for you and make sure it doesn't go to a webinar. I'm going to turn off the screen sharing. I promise I will put the screen sharing back up. Free indicator. Yeah, that's definitely an indicator download. I'm going to show that to everybody. You said it went to a webinar. Look, right here on the site. Free indicator. You click on that. All right, let's get out of here and go back to the charts. We had a request for the British pound, Japanese yen. Let's look at that. Look at all these pivots. Look at these, everybody. It's pretty amazing. We're at a golden age of pivot trading right now. This is really incredible stuff. This is really great stuff. On the pound Japanese yen, we have divergence up here at the top of the screen. In this case, we have just gotten down to the trend line on our screen right now. So we're on the verge of a trade. We have a ton of missed pivot levels on this screen right here, friends. And we have a cluster down here at 164. We're 400 pips higher right now. We're at 168.16. The pound yen is going to hit 164. It's going to happen. It's going to happen. Now, I don't know if it's going to hit these ones. We're getting really close to getting 30 days out from there. So that's not That's not as likely. But this cluster is what we want to focus on, where the monthly December pivot is, the weekly from November 29th, the daily from November 22nd. That is the pound yen. That is definitely an exciting one to watch. What a great choice you made, Carlos and Abishai. That is a great, great choice. Let's take a look at euro dollar. Euro dollar is not my favorite currency pair to trade. It's the favorite of the world, right? Everybody looks at the euro dollar. But as you can see on the euro dollar, we do not have the same opportunities, right? We don't have the same number of missed pivots. There's no clusters. There's no big trade happening here. Now, we missed a pivot on the 22nd of November, and that led to a trend. Great. That's awesome. And you could also see on the euro dollar right now that we have some neat divergence up here at the top. You can see some divergence up here. We're probably going to fall on the euro dollar at some point in time, but we don't have a big cluster of missed pivot levels. Not as interesting to me. It just doesn't make as much sense to me to trade something that doesn't have those big, giant profit targets. British pound Canadian dollar. Jason, what an awesome request. British pound Canadian dollar. Now I can come back for Kevin and Mark, and we can do a webinar about stocks on pivots a little bit later for those of you that are interested in ETFs and whatever else. You can apply this research and what we're doing to those. But first, we're just going to cover what I was asked to come here and cover, first of all. You can see that the weekly pivot from last week was hit. That's not atypical. The pound Canadian does have a bit of a cluster. It's just down here at the 1.7100 area. My friends, I'm going to say it again, this is going to get hit. It's going to get hit. It's going to get hit. 72.17 is, it's going to gap open on Sunday. It's going to hit that level. These pivots are going to get hit. There's just too much of a likelihood. How did this whole trend start? Let me ask you that question. Let's see who comes up with the answer. How did this whole trend begin? I'm going to pause for a moment, and it's like a little quiz. How did this whole trend begin? From a missed pivot on 11/14, Mike. You are absolutely right. David, Mike, Fasal, Jasmine. Yeah, from that missed pivot down there. So absolutely. So Kevin, Earl tells me I'm out of time. Is that true, Kevin? Should I wrap this thing up, or do I have a few more minutes?
No, Rob, you have until 11.
All right, so Earl, keep your pants on, my friend. I still got the floor. Let's take a look at the dollar yen for Sherry. It's nice to be here with all of you. Earl, I know you probably want to hear from Steven. Steven is great. I bet Steven's even here. Steven is awesome. He's probably going to be here any minute now, and Steven's presentation on price and candles is just awesome. So I'd be excited for that too, Earl. I'm sorry. I'll try to be as interesting as possible for the last part of my presentation here. This is the dollar yen, folks. The dollar yen is highly correlated to the U.S. stock market, the S&P 500. And look at this. The dollar yen has been on a rip-roaring mission from God. It's like one of the Blues Brothers. Stock markets are out of control. Every single like almost every single person I know says there's no reason the stock market should be doing this well. And that's exactly what they said back in the technology boom, but it went for years. You don't want to argue with the stock market. Not a very good argument to have. You want to use your research and your brain. This trend is probably going to continue. How did we know that this trend was going to begin? We didn't know it was going to go this far. I'm not going to be ridiculous and tell you I knew that it was going to go this far. But when it missed a pivot on the 19th of November, that was an early warning sign. You drop back, you buy it, and you hold on. When it starts missing a cluster of pivots, you want to start getting out of that trade. Let me show you how someone might go ahead and trade this. Now, this is a little bit more complicated because Sherry, who asked for the dollar yen, you'll notice the cluster of pivots, the first cluster right here was already hit. We had a weekly and a daily missed together, and that was hit. They always get hit. Those clusters always get hit. We have two more on this currency pair, and this is not usual. This is an unusual occurrence. We have a weekly and a monthly together around 101. That's going to get hit. That's going to happen. But down here from about a month ago, this cluster never got hit. It never got touched, this daily and this weekly. I think the time may have come to give up on price returning to that level, the 98s below 100 for a while. Think about it for a minute. We crossed that psychological barrier of 100 on the dollar yen. Stock markets are just ripping. So I don't think that this is going to get hit anytime soon. I think we're done with this for a while. That might take 120 days. It may be May of next year when that level is hit. Sorry. This, however, 101 area is totally possible. You get bad economic numbers on a report. You get a bad Tonkin survey in Japan, and boom, we fall back to this cluster of weekly pivot and monthly pivot for December, and we're probably going to do that within, I would say, the next 20 to 25 days. If we break this trend line here, Sherry, underneath price, we are going to hit 101. It is guaranteed to happen. Now, the dollar yen, something that's interesting about the dollar yen is it doesn't have the biggest profit targets. The dollar yen doesn't have the range that the pound yen, pound Aussie, pound Canadian, euro yen, CAD Swiss, Aussie dollar even doesn't have those same numbers. So my friend Stephen Bigelow is in the webinar. He's coming in here pretty soon. I'm super excited for you to hear from him. He's going to be awesome. It is absolutely worth your time. So does the S&P 500 have any relation to the Forex market, says Mukesh? What a fantastic question. You absolutely yes. I'm going to give you two financial instruments that are highly correlated to the S&P 500. The Australian dollar Japanese yen is spectacularly correlated to the S&P 500, and the euro yen is spectacularly correlated to the S&P 500. Movement in one is often mirrored by movement in the other. And when one moves and the other doesn't, the one that didn't move is going to eventually catch up with the other. They are highly correlated, and if you are interested in intermarket analysis, you're going to love that. Now, the euro yen on the 4-hour chart has broken a trend line, has been divergent, has a cluster of pivots around the 140 area. This is going to get hit. I'm going to say it again. It's going to get hit. Now, if you pay attention to what Stephen has to say about reversals, you're going to be able to combine what you heard today from me with what you're going to hear from Stephen, and he's got some great stuff. You're going to be able to learn about reversal candle patterns and stuff like that. I'm not going to give his presentation for him, but I'm saying pay attention because look at this opportunity in the euro yen. It is enormous. We have a cluster down at 136. That's 500 points lower than where we are. 500 points in the currency market is like getting 100 points on Amazon. It's just unbelievable. It's why I trade the currency market, because of the movement, because of the potential to plan trades like this that are pretty substantial over time. All right, I had a ridiculously awesome time talking to you. I want to remind you of two things. When there are clusters of daily, weekly, and monthly pivots that are missed together, price is bound to return to that level. Number two, if a pivot is missed on the day that it's created, we trade in the direction of the miss. That's a trend trade. I showed you some research that went along with that trend trading stuff. 97 of all pivots are hit within 120 days of their creation. I have research. I have materials. I have 5 or 6 strategies, which I call the missed pivot trading formula. You can get more information about that. And an indicator to put pivots on your MetaTrader 4 screen, your NinjaTrader screen, your eSignal screen, and your TradeStation screen. And you can get that indicator for free at realtraderswebinar.com/TFL. When you get to that page on that link, you're going to see a free indicator download link. You're going to see a course link here to trade pivots together with me. You're going to see a link to come into the webinar that you're already at. So you've already done 1 out of the 3 things on this page. That's pretty awesome. Then you got to just do the last 2 things. Like the free indicator is awesome. And you will also be registered for a webinar that teaches you more on how to use the pivot indicator that's free. And the course is not free because I'm I may be easy, but I'm not cheap. So I had a great time, Kevin. I love you guys. You guys are the absolute best ever. I had a really fantastic time talking to you today. Stephen Bigelow, I hope you have a fantastic presentation. And thanks everyone for being here. You spent some time with me this morning, and I really appreciate that.
Thank you. Thank you so much, Rob. And we just want to thank you again for coming in, even though you weren't feeling well.